everyone, welcome to Options Discovery on John Lothian News' The Spread. My name is Asma Awass, and I'll be your host throughout the series. Just like you, I'm no expert, but with the help of some, we can learn a little bit more about options together. In this episode, we'll be talking about what brokers are in the options industry and what services they provide. Later, my colleague Alex will be sitting down with one of the biggest pioneers in the brokerage industry, Scott Sheridan. Scott is the CEO of the brokerage firm tastytrade and co-founder of the well-known trading platform thinkorswim. Scott gives great insight onto a topic not typically covered in the derivative space, which is entrepreneurship. Stay tuned for that interview. Before we talk about what brokers do today, we first need to go over what a broker is. The Securities Exchange Act generally defines a broker as any person engaged in the business of effecting transactions in securities for the account of others. A great example of seeing brokers in action is on the trading floor of an options exchange. Floor brokers would get customer orders for options called in. They would then need to go to a market maker, sometimes known as a specialist, in the trading area for that specific option to execute the trade. In the options industry, this definition encompasses those who are responsible for the execution of orders on behalf of their clients. Brokerage firms can serve both retail and institutional clients and route customer orders to different trading venues for execution. Brokerage firms have typically made their revenue from trading commissions. But over the last few years, this business model has slowly changed to another called payment for order flow, particularly in equities trading. Payment for order flow itself is a much deeper subject that we will cover in a future video. Brokers have what is typically referred to as agency duty, which means that brokers will always try to execute customer orders at the best possible price. This duty means that trades need to be executed at or better than the national best bid and offer, typically referred to as the NBBO. The agency duty of brokers is also enforced by the SEC's regulation NMS, which prevents executions at a worse price than the NBBO, otherwise known as trade-throughs. Some brokers trade on their own account along with executing customer orders. These brokers are commonly referred to as broker-dealers. Broker-dealers work both as an agent, executing customer orders at the best price, and as a principal, trading on their own account. If the agency and principal duties seem to be a bit conflicting, it's because they are. This is why the SEC decided to create Regulation Best Interest, commonly known as Reg BI, in order to manage this conflict of interest. Now that we're up to speed on how brokerages work, let's talk about what it takes to start one, or for that matter, any business in the derivatives industry. To do that, my colleague Alex will be sitting down with Scott Sheridan, the tastytrade CEO, who also happens to be the co-founder of the trading platform thinkorswim. Scott is an industry legend who knows a thing or two about starting a business. So without further ado, please enjoy this week's interview with Scott Sheridan.
All right, everybody, welcome to another episode of Options Discovery. Today, we have Scott Sheridan, CEO of tastytrade, formerly called Tastyworks. So let's just start off, Scott. Can you just thank you for coming on the show and quick introduction of yourself and your background and how you got to where you are today?
Yeah, sure. Pleasure to be here. Thanks for having me. So it's been a fairly strange and I think unorthodox journey. I graduated college in 1985, probably before most of your viewers were born. It's safe to say. Wound up going into, and this is funny because my kids laugh at this with not knowing that you have Amazon Prime today, but I started a mail order business. So that actually was a thing before you had all the delivery services that would bring things to you in about 15 minutes. So I had a mail order business selling CDs. That was another thing, and sunglasses. Worked out pretty well, learned a ton from it. And one of the things that I always talk about, being an entrepreneur, not every business can be successful, but it's what you learn from it and you take away. And frequently you learn more from the losses than you do from the gains or the winners. So I did that for about a year, became interested in trading. My undergraduate degree was in finance and economics. So I had a business background, didn't know anything about trading, although Chicago, which is where I'm from, home of the derivatives market. So we had the Board of Trade, the CME, the Options Exchange. So we're the epicenter. And I was able to meet somebody who, that's typically how this happened. You meet somebody and they take you down to one of the floors. Mine happened to be the Options Exchange, and I never looked back.
Really interested. And so you've spent around 20 years at the CBOE, if I'm correct there.
I did. It was a little less. I was started in 86 and I officially left in 03. So, but a long time. I mean, in trading terms, most traders, I think the cutoff is probably about a year, where if you're going to make it, you got to figure it out within a year, because typically if you don't make it by then, you're not going to make it.
Yeah. Really interesting. And so after leaving the CBOE, you kind of started a couple other ventures. Can you kind of go into those as well?
Sure. Well, the reason that I left the CBOE was my partner, Tom Sosnoff, and I saw the writing on the wall, probably a little bit early, but we started an options platform trading business called Thinkorswim that we ultimately sold to TD Ameritrade, and now that entity has gone over to Charles Schwab. So my guess is most people are familiar with it. Super proud of it. I always referred to it as my baby, although I have no connection to it anymore. Still fun to see the commercials, and it's great to see that the Thinkorswim name has outlived both Scott Trade and TD Ameritrade. So from there, I wound up leaving in 2012, and I took some much needed personal time, some time off, although Tom kept trying to get me to come back. And I wound up coming back in May of 15, and we started, as you said, at the time it was called tastyworks, the brokerage firm, but about 2-3 weeks ago, we officially changed the name of the brokerage firm to tastytrade. So, and that's where I am now, the CEO.
I guess to kind of transition now into the brokerage business, and let's just start off with tastytrade itself, and kind of talking about, you know, what the firm is. I know we've kind of already mentioned this already, and the tools that you provide to investors on the platform.
Yeah, sure. I mean, again, as I say that it's commoditized, there are differences. So on our platform, you can trade depending on your account type and your approval. You can trade stocks, options, futures options, crypto. So we've got it all. We are looking to expand into some other asset classes as well. We'll see how that works. One of the items that, that we will always focus on, let's say this, take a step back. We always focus on the customer. So everything that we do revolves around, how does this benefit the customer? Does it make for a better trading experience? So for example, it took me about 11 months, but I finally won. And I believe we're the only firm that offers this, but we allow for naked short calls in IRAs that are over $25,000. So when I first started going down that road, I was told no other firm does it, so you can't do it. And I said, well, that's not an answer. I was told by our clearing firm they didn't think it was a good business decision. And I said, that's not an answer. So I believe every firm will, I know we do, but I believe every firm will allow somebody to sell a cash secured put in their IRA. So that means that if you sell a $50 put, you have to have $5,000 to cover less the premium received, assuming the stock, because the stock can't go below zero. So the reason that no other firm, I believe, offers short calls because they don't want to deal with the risk on the upside. So theoretically, you could have a stock that would, explode, you blow up your whole IRA. So I'll ask you a question now. This goes back to 18 when the market was up. I don't know if you were participating. The market was up every day. So what we did was, because we hold just like a stock, it's 100% margin for an option. For the option, it's 100% margin. For if you're selling a put on the call side, we're also holding it 100%. So the research team for Tasty Live ran, I believe, 350,000 incidents of stocks over $25, no volatility products. How many occurrences in 350,000 events, close to close, so 24 hours to 24 hours, how many times was the stock up 100%, which would have then caused a problem?
Maybe like 5-10% of the time.
Okay, so 10% would be 35,000, 17.5 if you're going 5%.
Zero. Wow.
Zero. So this is where perception can become reality, and people hear, oh, wow, you can't sell a call. That's too risky. Now, I'm not saying that there isn't risk in selling a call, but
Yeah.
when we hold it in an IRA up 100%, there was no violation. Now, it doesn't mean there can't be. I'm not saying it can never happen, but again, your answer is very common. 5%, 10%, well, that seems like a reasonable number, because people are like, oh, I've heard that's super risky. You would never do that. And again, I'm not suggesting it's the right trading strategy for everybody, but it was the point I was making. We fought for this one, and for the people that use it, they absolutely love it. Absolutely love it. I have, another one that we are fighting on, and I think this will impact probably a lot of your viewers, which might have a smaller size account. If you're familiar with the pattern day trading rule, so the PDT rule on the security side, for those who are not aware, is you're limited to 3 day trades, which means you're opening and closing the same thing on the same day. It could be an option, it could be a stock. Futures, crypto are not included in the PDT rules. If you're under $25,000, you are limited to 3 day trades in a rolling 5 business day period. So we have been working with a group called SIFMA. It's a big industry organization. It was pre-COVID. I thought we were making good progress with FINRA and the SEC. And what we're trying to do is get them to modify the rules. So if a firm has a front end that could show that they could control this, that the rules don't apply. And the reason for the rule, which came into existence around 2000, back then, and it was a reasonable decision, I think, by the regulators at the time, but it just doesn't exist anymore. There were day trading shops literally in a shopping mall. Go into a shopping mall, you pull in, there would be some day trading shop. You would go in, you give them $10,000 of your own money, they would give you $100,000 or $200,000 with which to trade. If you lost your $10,000, you'd be done. But the firms weren't capitalized well enough. So if they're giving 20 people $100,000, do they have the money to back that if something goes horribly wrong? The answer was they didn't. And they correctly came in and said, you know what, forget that. If you're only 25 grand, three day trades in a rolling 5 day business day period, that doesn't exist anymore. So we were pleading with them to say, look, here's why. Great deck. We had 16 firms that were involved with this. COVID hit, conversation stopped, meme stocks happened, regulators no longer interested, although we're starting again. And the big reason that we're starting, and I'm not going to quit this fight, is that FINRA, depending on what clearing firm you were with, you got either one PDT reset a year, or Apex, our clearing firm, had a more relaxed view or opinion of the rule, and they gave customers a reset every 90 days. The new FINRA interpretation, which I'm saying it's a new rule, it's not an interpretation, 1 reset in the life of your account. So Alex, if you become a pattern day trader and you're under 25,000 at a firm ABC, you get 1 reset. If you do it again and you can't get over 25,000, you're set to closing only. My analogy is that it's the same thing as if you lived in Illinois, you get 1 moving violation. If you get another moving violation, you lose your license for the rest of your life.
Yeah.
Seems a bit punitive. And I hope that the regulators will take a step back and realize that they have, in my opinion, overstepped their power. We'll see.
Yeah, and that's really interesting. And I think that lends into a bigger theme within tastytrade itself. I mean, if you just go on the website, one of the most first and foremost quotes on the website is giving power back into the hands of the investors, because with the implementation of Tasty Live as well, which we'll go into, and that whole educational side of the business too, being able to give the tools to the investors so that they know that the best person to manage their money is themselves. Well, and something I want to dig into is Tasty Live, obviously as an educational platform, and kind of Tom's inception into the Tasty Live, Tasty Works idea. Can you kind of talk about some of the history behind that, as well as what it's evolved to today as a network for education?
Yeah, absolutely. It's for anybody that has not checked it out, please do. tastylive.com. It's all free. So there's no hook where you got to go, you get a couple, videos for free, and then you got to pay for it. It's all free. And it's amazing. And they do tours around the country. They're starting, they stopped during COVID. They're starting again. So check your city. Typically there's Saturdays. There are some Sundays in there, and they're great. Super entertaining. And when I say amazing information, they have college finance professors that will watch the show to learn about the math, because everything on the show is probability based. It's all based on math, as opposed to you have a lot of educational platforms that will teach you charting. So you're looking at technicals and or fundamentals. This is strictly math. It's all probability based. It's really, I think it's a great way to look at trading and look at the markets. So there's a bunch of different talent, and you can hopefully find somebody that you connect with. And the feedback that we get on it it's awesome. So they were our original marketing partner, because everybody who was watching for the most part came over, opened accounts with us, and we've moved well beyond that. But now I think we're feeding customers back. So customers who had never heard of the network are coming and finding the trading side, and then they're discovering the network because we do have the network on our software. So if somebody wanted to watch the network while they're trading, again, free, go ahead, have at it.
Yeah, and that's interesting. And you guys have also implemented some of those educational pieces into the trading platform itself with the platform feed and the follow feed and things like that. Can you talk a little bit about that as well?
Correct. So we do have something called the follow feed. So let me see, I think there's about 15 different people that you can follow. And what's great is that the trades are put up live as they're happening, and they're real. This is not a paper trading platform. These are real trades that people are making. And if you want, you can go ahead and create a similar order and follow them, or you could just, for informational purposes, you could just see why they did it. And if you have questions and you want to reach out to them, they will get back to you and explain, the concept or the thought process behind why they made the trade. So I think it's a great feature on our platform.
Yeah, super interesting, and kind of digging through the information on the website. That was something I definitely wanted to bring up. So to kind of conclude this section, and to talk a little bit more about what you see as the future outlook of the brokerage space, what do you think the biggest trends are going to be moving forward, and what you guys are approaching at tastytrade?
Let's say this. I hope that it revolves around alternative assets, because there's a lot of really good ones out there, and people being open to learning about how to take calculated risk, especially younger people. They have to get out there and take some risks. You can't sit here and just say, I'm going to buy the S&P 500 in my mind and just say, that's all I'm going to do. That's not going to teach you anything. And in the long run, some of you, I'm sure there are fund managers that will tell me that I'm wrong and they should just buy the S&P 500. But as you said, or you made an earlier comment, people need to take control of their financial future. And you're not taking control of your future if you're just handing your money over to somebody who's more interested in the fees they're charging you than in your return. So how that's going to happen, I hope that what you're going to see other platforms follow. We have some ideas about bringing out, again, some alternative assets. We are getting very close to, we have a wallet. So there's a Tasty wallet. It's outside of the brokerage firm, but it's part of the overall company. So if people have coins at somewhere else, they can put in a wallet, bring them over to us. We are about to allow for coins to come in for deposits, which is awesome. We had a hurdle. There was an AML, which is anti-money laundering, but there's so many good systems out there that can track where the coins on the blockchain, where the coins came from, that we're comfortable with it. Our clearing firm is comfortable with it. So my fear, that's all the good stuff. My fear is that the current regulatory environment is non-friendly to individual traders. So you have the SEC and FINRA, and to a certain extent, the CFTC and the NFA. They're trying to make it so difficult for retail firms and for retail customers that they're not going to say that they don't want these firms in business, but I think it's implied by what they're doing. Now, I believe that the industry is strong enough that we will weather the storm of what we're going through, because it does ebb and flow depending on who's in office. But I've been doing this on the retail side for 23 years. But again, going back, I started trading in '86. So I've been in the industry a long time, and I'm not the only person that thinks this. The regulatory environment has never seen, it's never been at the level of scrutiny that it currently is today. So that is my concern. And, talking about Silicon Valley Bank, which just happened over the weekend, and also the bank in New York. My fear is that something like this, my fear is not that it becomes a systemic problem where it goes through the banking system. I don't believe that's going to happen. I think it's a, one-off, a two-off, and we're good. I mean, if you told me that one of the 5 big banks was having a problem, I'd be worried. I'm not worried about these banks. They took, when I say take risk, they didn't take intelligent risk, and they were either, let's say this, it's either fraud or incompetence or a combination of both. But, when they went out and 30-year paper that bought long-term paper, 30-year paper-ish at 3%, and now interest rates have moved significantly, they're dead. And they chose not to do anything about that, which shame on them. Now, my concern here is that the regulators come in and you have politicians that start screaming, we need new banking regulations. Look, this is going to happen. And I go back to my point, how many staff were up 100% day over day out of 350,000 events, and it was 0. And I'm not saying that there is a 0 chance that there is some systemic problem that we don't know about. We're not looking at another 08, 09. That's just not, it's not on the table right now. But regulators can use fear to say, well, we have to win this. And fear never is a good thing because it forces, I think, people to make bad decisions. So my upside is extremely bullish on the industry. Options, the option volume from a retail perspective has absolutely exploded over the last 10 years. And I don't see that changing unless the regulators come in and tell people that you're too dumb to know what you're doing and we're not letting you do it. You need to give your money to a money manager who, again, for the most part, they don't care about you. They just care about making fees. So kind of a long ramble, but hopefully that answered the question.
No, it definitely did. And I think it was some great insight from someone that's really been in the industry for a while, can kind of see these trends come and go. Yeah, that's really interesting to see from the retail perspective. And I think it is pretty well aligned with tastytrade and what you guys stand for in terms of giving power back to the investors.
Thank you for watching this week's episode of Options Discovery. I hope you learned a little bit more about brokerages and entrepreneurship in the options industry. I also want to say thank you to Scott Sheridan for participating in this week's interview and sharing a little bit more about his experience and knowledge with entrepreneurship in the derivatives industry. Stay well, everyone, and I'll see you all in the next video. If you're hungry for more options content, make sure to subscribe to the JLN YouTube channel and check out our social media accounts. Be sure to check out our website, johnlothiannews.com, Markets Wiki, and the John Lothian newsletter for more content.